I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we're going to go over overflow of everything that's happening in the markets right now from the standpoint of the technicals, but we're also going to discuss the possibilities of what's likely to come out of this week's employment reports. Let's get into tonight's video. Well, welcome everyone. It's an interesting markets that we're in, and last night the data sheet that I put out was recommending to buy the dip, and it came right into the range, and it was a decent trade off of that level. But the markets just continue to be basically in the buy the dip mode. There's a lot of folks that are experiencing extreme FOMO. I see folks on the channel telling me that we missed the whole thing, we're on the sidelines. Meanwhile, that's why I always tell you folks, you should get some of our products. I show you the WaveTech database every day, and it's a great indicator. It's even a better tool, and we had over 12,000 buy signals in the last 2 weeks. So we always have this experience, especially in these emotional markets, and you have to realize, excuse me, you have to realize that the markets rebounded, 6% in actually not even 2 days. It was about 6 hours. So when you get that type of volatility here, these type of things are going to happen. But the real question is that, are you, those of you that are feeling that way, are you sure that was a bottom? And I certainly think it was a bottom, and I declared it within a day or so that at least we have a bottom. We're going to rebound back up to the 21-day moving average. Now we went all the way to the 40, but why? Because the 40 was coming down to the action. So now we're coming into a fairly critical point in the next week or so. And that is where I think where it's going to get really interesting. And there's still live Fibonacci targets to the downside. We're still locked into this sideways pattern, in my opinion. I don't see that we're just ready to break out. Possibly if the Trump White House would actually get a deal and tell us that they have a deal and that what the material were, so we could start to go off some of the things that I discussed last night, which was, if it's Japan or whoever, that could happen. One of the things that geopolitical issue came out, we got a little tension in Pakistan and India right now, and that's always one of the most feared things that has been talked about for a long, long time, as far as I can remember. And, so we've got more turmoil, more elements that could come into play. So we're just going to have to keep an eye on these things. I'd be fairly quick. I would not be very quick about calling for the low. Maybe we consolidate for the next 3 months, and then ultimately we set up a base that can go forward. As I've been arguing all along, until our intermediate database gets filled back up in at least 42%, we're not going to see any material moves to the upside. There's just no structure to this market. You've got the still the Meg 7 driving the top end of these indexes. It looked like we're going to have a negative day, and then the buy the dippers showed up, and we ended up positive, and we're still trading about in those ranges right now. So just got a couple notes. If you're feeling FOMO, this is what I wanted to say about this, and I'll probably bring it back up, is the FOMO feeling. No one knows how to pick the top or bottom. I've made a few calls myself. I don't really, anybody's been around this channel for any time now. I'm more of a macro. I'm trying to find that middle sweet spot of the trend. And most of the money's made not by buying the low. The money's made was when the sustainable trends come in, because then all these stocks and everything that makes up these indexes will actually set up, right shoulders. There'll be retracements of lows, and that retracement or that retest are the times where you want to buy. The fact that you bought early, I always say cheap doesn't make it right. And I know a lot of people look, oh, this is like the best price. That's okay. I don't get much out of that, because there's really it's not a very good game to play, because if you're wrong, it just, it gets ugly really quick. And this is why I've been arguing for weeks about structure in the market and those type of things. I've seen a lot of market tops and lows, and you need that structure. I've been beating on it. I finally tonight have the chart that I've been trying to, every time I think I'm going to segue into it, I'll go into, and I'll talk a little bit about the angle of attack when it's appropriate, probably when we get in the S&P or one of the indices. So the plan, I don't really see much to talk about out there. We do have, we're working forward to the middle of the week, which Wednesday we'll get PCE, we'll get ADP and some other numbers. But though I'm not even sure what those numbers mean at the moment. One of the things I on the title of this video was, is the labor market going to cause some things to is it going to get weaker? Is that going to cause a bit of a reversal here? And I showed you last night on, I think I actually moved the chart, but I can put it back up easily enough. But the employment is actually being forecasted to not go up, but come down a little bit. And this has been the interesting thing about employment in general, if we go back even maybe 2 years. But if you just watch what's going on, we've just been hanging around at this lower level, this 4.2. I think we got absolute lows were around 3.7, but 3.7 to 4.3. We're just locked in there. I was showing you that there is some forecasts toward really more into 26 and 27. I don't know how they'll look when we get there, but right now it's forecasting some numbers up in the 4.5 to 5.5 range on unemployment. I'm not sure we're going to get there. For right now, it's my old analogy is that we're driving on an old country road and there's no moon. We got the bright headlights on. We're looking for the next corners, and the corners have been really tight in the last month or so. We've seen going back 3 weeks, there's a lot of corners up, back and forth. They're not all in the same direction. So we're definitely still in this volatility range. We're still in the process. Maybe when I go through the indexes tonight, we'll bring up the weekly, because we have multiple weeks yet before we see normalization in the weekly charts. Now, I talked to you folks about that last night, is that you get these explosions or volatility bubbles, and then you normalize, and then you get the next move. It's in between you need to pay attention when we're normalized, looking for that next volatility bubble and direction, and then watching the patterns unfold around those levels. So that's, for me, is the important part. I know a lot of folks want to be the person go, I bought the low. I've never been that person. I don't need that. What I want to do is I would rather buy like the right shoulder, like I said, the retracement, and then catch that big long run, sustainable run. Lows are just lows. They're not anything other than that. They're cheap prices, and cheap prices don't always lead to the next trend. And I'm more of a trend follower and looking at trying to capture those. So let's set up tonight. Should be fairly quick video. We'll see how we get through things tonight. But we're looking at going through the database. It should be run. Let me double check. I think it's pretty close to being run right now. And once that's finished, let me just look here. Yeah, it's completed. So we'll definitely be able to get to that. So we'll do the database, and then we'll go right in through the indexes and maybe touch on maybe we'll even hit crude oil. I think there's some pressure coming back in there again. So let's go ahead and get into the broadcast here. And we're at, I'm going to have to check this. I'll refresh this in a minute. 43.51. I'll make sure let me just switch back and forth here real quick. I just want to make sure that's refreshed. Yeah, so 40, that sounds sort of what it was last night, but the difference is we have 542 new entries, and we have about 132 exits. So there's a bullish ratio on the dailies again. So we're still getting traction, even though today was really a sloppy day, a positive, negative day, finishes positive from an index standpoint, but the internals still seem to be getting more traction from the standpoint of the day-to-day buy, sell orders, and the percent bullish is going up. The next level we're going to need to watch for is 48%, and at that level, above that level, then we've got another conversation that we're going to have, because that will be more of a material move, and we start to get into 52 and up to into the 60 percentile range, which is then as we're talking, some pretty robust short-term trend there, and those type of trends typically, and that traction will carry over into the intermediate models, which are right at 20% right now. So we're a long ways from having any real traction on the intermediate models. We're seeing here we now have, we did get, see, I can zoom up a little bit. Yeah, we did get a sell signal. We exited only after 9 days on the consumer non-cyclical, and then up at the top here, you can see these are all the material, current basic materials and everything here. So everything's profitable. Some of these things have only been on for 2 to 4 days, so these trades have moved pretty quick from an index standpoint. And if we were to go back and look at some of the indexes, we would see, we would see the, let me just put it up here. This is a consumer cyclical that just kicked out. Let me move that over so you can see it. And then we've got capital goods, basic materials, technology, transportation, utilities are all long right now on a short-term basis. So we now have 6,394 symbols long, and that represents 43.51. And the groups and sectors are right around the 50 percentile range. So that is likely to just kind of keep, that's some pretty decent traction for a potential bottoming pattern. But a lot of times if we don't get above 48%, then a lot of times what will happen is this thing will just fail. It'll come back. All of a sudden we're at 28%, 22 again, and starting to grind to rebuild the structure. So short-term structure is looking fairly good. Got a big hurdle at 48, and I'll just talk about that when and if we get there. All right, let's move over to the S&P, and we've got. I'm going to draw in this pattern because I think it's setting up for more of a potential ABC, XABC, a double three type pattern here. And let me draw this in because this is, I get a good feel for a lot of folks. I know people get really frustrated out there. I'm sorry if that's you, but the best money is made, if you think about it. We go back to 23 and 24, the money was made in getting in those big trends and just trying to play, getting emotional about this. This is exactly why I built the portfolio manager and some of the other tools I have, because emotion's never a good thing around the markets. All right, so this is the I'm going to draw it in. Let me make that a little less. So we've got this pattern that's setting up here, and this is the ABC pattern right here. What's possible is where we come down here. This is what I was talking about here. These Fibonacci targets are still live. There's one right here at 5180 is going to be the key pivot. So if that comes in right here. So typically these X waves will go below this level here. So we'll probably, if this is going to be an X wave, we're going to come in probably in between this level here, and then what we get is another ABC type pattern, and so this would be XABC, and then from this pattern, you would get a potential move higher up to test the 200. And this pattern could extend that we're in right now up to the 200. So let me just blow this out and redraw the alternate pattern. So the alternate pattern would be, this is ABC. Let me start over. Oh boy. Okay. So this would be, we'll just draw the ABC part. This would be ABC, but this C could still extend. We get above this 40 all the way up to the 200, then typically that X wave is a deep selling, a lot of deep selling. I don't think it would come down to here because this is the low, but typically, this is what I was trying to say, will come down below this B leg low, and then you get another ABC pattern, and then you could even do. Then you set up the like the big triangle, and then you find out which way you're going, whether you're going this way or here. And I think it's going to be a while before we figure out this pattern. I think we're going to have to go down. That's roughly into June, and I would argue that it's going to take at least that long to figure out this pattern. So there's going to be some really good trading in here. And figuring out some of these moves, these ABCs, should be able to, like I said before, this is a great straddle market where you can put in, go out a couple cycles in options, and sell the calls, sell the puts, and put a big range on it. You should be able to take all that money in the next 4 to 6 weeks. Should be your money. But you can always throw in, especially if it's futures or even if you're using SPY. You could throw, a long in there to offset it if you needed to balance out the call side shorts or whatever. So you can leg in and out of those strategies if you're proficient enough to do that. But normally, the out of the money options, that money just ends up to be yours. So that's certainly, and then we got this big bracket up here at the 200 and maybe as low as the we'll call it 5,000, 4,900 level. That's going to be your big range to pay attention to there. So I said I would go to the weekly. This is the pattern that I don't think we go anywhere in a big way, up or down, until this pattern's completed that I'm about to show you. So it's going to be just like we did on a daily. We're going to have to see these things start to contract in, and I suspect we'll get into some kind of pattern here. Once we get over to this pattern right here, we get over into this area here, this is where we'll be able to make a decision. So, but we've got this is a big range we're talking about here. Just looking at the numbers, I've got to take this off one sec. So the numbers would be roughly that 50, 52.50, and as high as that 40, which is going to be equal to the, I've talked about this number before. You're looking at up as high as 5,800. And that, you'll see it happen. I told you it was going to happen on the daily. You'll see it happen here on the weekly. You're going to start to see the market grids just start to, volatility to come in. And once it's normalized and we start to get to normal bars where it looks like these patterns over here, where you've got channels one way or another, then that's going to be the case. I'm going to flip back to the daily because the daily's already done that. And this is what I was talking about. You got the big volatility. Now we've had a little mini channel and a channel up. So this is a normalized market. And what we saw in the dailies, I didn't bring this up, but the dailies, we're already seeing it flatten out, start to turn down. We're trying to see if we can form a downward channel here. Right now it looks, projections are for sideways. Back to the weekly, just to go back to that pattern. This is going to be the key for the markets. And I'm telling you right now, it's going to be June by the time this stuff happens. We could, because it is what it is, we could trade, like I said, straight up to 58, 58.50 would be an extreme. That would be within this market grid. I think I pointed out last night, but just the range right now is 50 for that weekly market grid extremes, okay, is 50.93 to 60.12. So once this starts to turn down, and this is going to happen literally over the next 4 weeks. So we're going to end April here this week. We're going to come into May, and it's going to be the bulk of May will be spent normalizing this market. And we'll see what kind of numbers we get out of the database, specifically the intermediate. This relates to the weekly. But all of this stuff is just going to take time. And I know folks want to, forecast it. Yeah, you have to. I'm going to do an old quote of mine that one of the guys, when I started in Chicago Board of Trade in 1979, and this guy I was a grain guy, and he used to say, he used to say that the price of soybeans is made in the minds of men, not in the field. And what he meant by that is what the market sentiment would drive the markets higher than probably they should be. So that's why you look at oversold, overbought, those kind of concepts and ideas, and markets getting extended. All those words come out of the minds of men. And then when you look at the fundamentals tell you where the price really should be. So we are constantly fighting with the equilibrium between prices and sentiment and what people think. And now, and I've talked about this before, we have the trading community, the investing community is monster big. It used to be like 10 people. Now it's, 10 billion. It's not that many, but it's literally billions of people trading the market. So the numbers, the way that the data moves, everything has bigger elongated trends and all of that stuff. So perfect segue. I'm going to go back to the charts here. I can bring up the chart that I've been wanting to tell you about. This is a good time. So, all right. So whenever I talk about the PPMs, this is the probability map. I'm actually working on an interactive map I'm putting together right now that'll be a React, so you can actually go over. But this green line is typically, excuse me one second. This green line is typically what a PPM will do. It'll go up to this bottom PPM value up to about 0.5, 0.65 in that range, and then it rolls over and the momentum dries down. So there's three different cycles that when I'm talking about things, when you see, anytime I see an integer like 1 plus, so if you see the bottom scale here on this, let me just bring this up. The bottom scale, when you see the 1 plus, this red scale here, this typically means that what we're going to get is that this red line is going to get into 1.5 or 2, and these are periods of time when market trends are going to expand or extend beyond what you think they're going to do. So whenever you see a PPM value, PPM 1 or 2 primarily, that are greater than 1, 1.23, all that kind of stuff, we see it on Bitcoin a lot, it gets there. And those, when you get to that stage, what that means is that the market has the probabilities to continue on to the extended bracket. So if you're just applying a Fibonacci ratio to it, that's where you get the length of the wave, or the length of that price movement is going to be like 1.382 or 1.65, or even a 2-point number where you start to get these trends elongated. Okay. And the last one that we have here is this orange gold line, and that line is typically right here. This is the parabolic. So when you get it, literally it's above. So this number here, this scale for this is over here, and that's when you get in that excess 2.5. Then the market's parabolic, and that is where probably. And if you notice, over here on the red on the left is a stall zone. So once you get into that 3.0, 4.0, that the market, that's where you get the reversals and the rejections from. And sometimes, this is another little mini class here in the middle of the show. Sometimes what you'll get here is that the markets will get extended, and then you'll get a reversal pattern. Hopefully the markets give you a nice clean look, like a nice outside reversal, something that extended, and now it's telling you that it's exhausted and it's going to come back in, and that's where those patterns happen. So I've been wanting to tell you that for about a week, so finally got it out there. All right, back to the markets here. So where we are right now, if we look at, speaking of PPMs, forecast, the forecast for this is, if it got here on the weekly, it would get to 0.77. So these numbers I just showed you, the parabolic curves, they happen, I don't know what they are, maybe, 5 times out of 100 trends. They're very rare, but when they happen, they're vertical, and you got to sit back at some stage and let them run, but then you got to start figuring out where you're going to get out. And anyway, that's more of a trading strategy lesson. But the bottom line is, what we're looking at here is we're a long ways from that. We haven't even crossed the first derivative yet on the weekly. So right now we're at a negative 0.85. So this is a big negative, and I talked about this last night. The weekly 10-week moving average here is right now at 55.60. So we're trading right around it right now. We're looking at 50. At the moment, we're sitting here at 55.60, 51. So we're sitting right at that number. it should be the probability of the market closing above where we are right now is fairly low. It doesn't mean that it has to reject and get a big move here, but this is going to be a potential rejection point off the weekly. And like I said, if we just, it's Monday night, right? So we got a whole week ahead of us, but we got big news as well. So we've got PCE coming out on Wednesday, and then we got employment numbers, and maybe we'll get a feel for, it really doesn't seem to matter much, but the claims and the continuing claims are just like a flat line. They're pretty much range bound every week for the last 2.5 years. But the unemployment may have something to tell us. Maybe there's going to be some kind of surprise. I think expecting 125,000 jobs on Friday. So that's about half of the cookbooks that we saw last year. So maybe this is about the same if you take away all the fudging that was done in the employment numbers last year, then that, maybe 125 is the real number out there. But my point is, we're a long ways from having a material field to get sentiment to the point where you're looking at, market sentiment being enthusiastic. We're not there. There's certainly lots of trading opportunities and volatility, but we're not at that point yet. So I think I made my point there. So thanks for listening to that. All right. So let's jump into and go to NASDAQ. Yeah, we're half past the hour, so we'll keep rolling here. NASDAQ weekly, same pattern, same station. You can see let me blow this up. You can see the red dots in here. They're doing exactly what I'm telling you. They're kind of hanging around this 10-period moving average. And so it's interesting that this little range here is what's likely to happen. So one last thing that I want to show you. I'm going to draw something in, and this goes with the S&P as well. And is the red dot, this is what's being forecasted, this dotted line. And then what we've got here is sort of interesting. This 10-week moving average, if we can get, we're just above it, then we're going to get one of those moving average wedges that I talk about. And then the market can trade in these values in this range inside of this triangle that is forming through the moving averages. So this is what the beauty of the PPMs are. If we know that the PPMs are turning up and they have at least a 0.15 or greater positive, then we know there's some support there with the 21-period moving average. I'll bring them back up. We'll get the actual values here in a minute. With that downward slope on that 21, that's going to be the ceiling for any of these rallies that happen. And this is weekly, so it's fairly big. This puts us up there at that 57 to 58 handle range. Okay, so you have to do some daily analysis to get that honed in a little tighter. But this is ultimately the range that we're looking at. So I'll draw it in green so you can see it a little bit. But this should happen with this 10-period average, and then we've got multiple patterns that are going to emerge. It turns out I didn't know that my life was going to be about understanding moving averages, the probabilities around markets, but that's how it ended up. That's where my path led me. And I watched these same simple moving averages, 10, 21, 40 on a daily, weekly, monthly, 5-minute, whatever. I use the same increment, same SMAs. But what I tell everybody, I don't care if you use exponential, whatever. You can have modified VWAP. I don't care what you use, but understand the patterns and how they work. Okay, because that's really the key to success for me. as I understand how the markets flow around here, and is what I share with you folks. So when you see these type of patterns, in this type of pattern, because at the moment this 10 does not have a lot of material fact, meaning it's not, I'm going to show you the numbers here in a minute, but it's not yet bullish or positive. In fact, it's negative. So that tells us that there's some vulnerability for the markets to trade down here again, and then maybe set up, a larger pattern. Boy, I got a lot going on. Hang on. So right now we're still working on, I showed you the ABC, XABC. Well, that's on a daily chart. If you go to next time series higher, you go to a weekly, then you start to get, maybe then what you're going to get is then you're going to get this B wave down. This might be an ABC on a daily. It might be, and then you get, some pattern like this, and then ultimately we get some kind of floor or support level that gets defined by the markets. There's no way you can estimate these and you can trade off of those estimates, but until we see the structure at that stage, then you're going to know. And even here, we're going to have to figure out if it stayed within this triangle drone, which way it's going to go. Is it going? Is it going to break out of here, go up, or is it going down and test this and going lower? I did a configuration for you folks. I think it was probably last week sometime. My scenario still is that there's a possibility we got a whole nother leg down, because if we do the reverse fundamentals and we talk about what the possibilities out there. I mean, you folks got a positive scenario right now for a big rally and the economy booming. Please share it, okay? Put it down here. Put it in the after. Come back when this thing reposts and tell me, okay? I think right now that you can come up with that scenario, but you're going to have to wait the length of time that I've been telling you before you're going to find that out. Okay, let's move on. I want to bring the PPMs up real quick. So this is important. PPM2 is staying very negative here, minus 0.85. Current value on PPM1, by the way, is 1.86. And what I just show you on that probability map, this is an extended pattern. Even though it's rebounded back to the average, there's still a possibility of a retest of these lows. So be careful. Don't get too cocky thinking I saw some guy, I bought, $74,000 on Bitcoin, and I bought, the low on the S&P, and I'm like, so what? That's a trade. I've done probably tens of thousands. I know I've done tens of thousands of trades in the last, they're trades, they're good trades, congratulations, good job. But when you're starting to looking at trends and what's likely to happen, then, those are just trades. That's the noise. But this PPM2, PPM3, and the PPM 200 is actually still positive, but it's being forecasted. I'm just looking, and it's being forecasted to flatten out, which is dangerous in itself. So over the course of the next couple months, we're coming into May. By the time we get to the end of June, the dog days of summer, and maybe in July, then we'll have a better picture. But it's going to take a while, folks. I think I sunk my putt there, so I'll move on. I think yesterday we looked at RTY. Let's. I don't think there's anything here. I'm just going to bring it up for a second. Let's bring up the Treasury's still kind of sinking down a little bit, down to closed 422, got down to 21, so closed on the low. Notice, and we didn't have this view, because this is Monday night after. I couldn't give you what the market grid was going to look like. Look at the big contraction that's already happening. So we got the top end here where my cursor is. We've already got some contraction going on in the market grid. Once again, we've got to normalize before we'll know. But normalization now is, like I said, extreme levels, 395, 440, probably staying within probably, and I think an extreme down right now is going to be 405, and extreme up is probably 430. So that range is going to just start getting narrower and narrower as we come through. And if we go back, 3 weeks ago when we got the big spike that day, we were at 459, and we're down 30 basis points basically. So this is just, that was the expansion. Now we're normalization. Okay. But yeah, but it is starting to happen. We got another week where I would expect this grid to turn up here, and maybe the top end keeps squeezing down. And you can also see we get the big range. What the market grid is based on is the three week look back of the volatility, of the range volatility. That's part of the equation. So all you're seeing is that's going to collapse. And once you get into, it's typically 3 and 5 days, weeks, bars. So if you're in a 5-minute bar, you get a big expansion like that. It's going to take you 5 or 6 bars, 30 minutes to an hour to consolidate, normalize, and be ready to do your analysis on where that next pattern is going to go. So hopefully you've been on top of it. You were able to catch the expansion up or down. And that's the game when you're looking at intraday. Last night was a good trade off of London. I think I got down about 5 a.m. Eastern time last night, but that was like a really good time just to throw some shorts out there and put some orders to bring them back in later. But all of this stuff that we're seeing here is normalization, that we're working towards that normalization. Okay. Let's do crude oil. I don't cover that as much as I used to, but we also saw that 3 weeks ago. This is a weekly chart. All the markets did that big expansion bubble, so everything's consolidating. Where you can see the red dots are suggesting we're going to come back up to about 68, 69 bucks, maybe 70 again. We're going to move back into this moving average pattern. And that's been kind of the story with crude. We get these little moves and then it rebounds back up. This has been one of the longer retracements that we've seen. So maybe this rally back won't be as strong, but I think we'll probably stall here around 68 bucks, 68.50 kind of round numbers. And then, but we're looking at, once again, and this has been a pattern with this kind of volatility explosion that we had, was we get the short term, like ppm1 is a short term indicator, ppm2, 3, and ppm 200 is on the 200 day moving average. So those move much slower relative to that time increment or of that moving average. So all the volatility is going to be indicated in ppm1. The trend is going to be more, the primary trend is going to come out of ppm2 and 3, and they're still down. So, and that's the same story. You can carry these thoughts and this analysis out. So if you have the indicators, you can get them, and you can use that as a guidance for that. So we'll look at the gold here. Gold continues to be in this pattern. If we go back to December of 24, there were 3 fib targets on the upside. They were 33.46, 36.54, 38.44. So we've hit the 30. I'm just trying to get this number here. Yeah, we've hit 33.46 with 33.60. Here we go, 35.09. So we went above that number. Now we're working sideways. All of the indicators on ppm 1, 2, and 3 are all showing a loss of momentum, but you can see, I've shown you this chart before. When we look at the angle, the dotted lines are being forecasted. They're using the ppms to forecast that angle and looking out in the future. So what we're looking at is a very steep rally. I think we go sideways to up during this pattern. We also have the extreme volatility bubble. So let me draw it in. This kind of seems to be the theme for tonight. So this should do the same thing here with this. We're probably going to get some kind of pattern that sets up, and then the range that you're going to be able to trade in is going to be you're going to see the markets trade in this range till we get normalized, and these forecasts for the 10 and the moving averages, these will come in, but this is, we're looking into July and August here. Okay, so I'm just draw a line up. This is roughly September. So you're going to have sideways, plenty of volatility. It's going to be a good trading market. Once again, if you're holding stuff, probably writing calls against it is probably going to be a good way to make some money. And if you want to buy more, then sell some puts and see if they'll give you some. If not, they'll give you the money. All right, we'll go to Bitcoin. Bitcoin keeps as keeping that bid in here. I've been on weekly charts the last few, but we're trading up the higher end, still projecting up for getting close to that 100 mark. Just being Bitcoin, and the world seems to be bifurcating. I was thinking about this the other day into for the most part, younger crowd into Bitcoin and not wanting to have USD, and then you got the old school folks around. But the reason you've got such a stampede possibility here, everybody, I would say if you ask everybody in January and February, you can start with Michael Saylor, where Bitcoin's going to be end of the year, he's going to say 200,000. Everybody said 200,000. Maybe this is the if we bring this up here. I'm going to put a monthly. I know there's some long-term monthly. Yeah, I thought there was something bigger than that. But going back to May of 23, when the price was closed at $27, we got these Fibonacci targets, and the middle fib target was for 105.86, which we just exceeded that by a little bit, got a bit of rejection around that area. There's still a live target 120.800. But if we look at the structure of this, there's a pretty good argument that there's a five-way pattern, and we're probably going to get this a monthly graph here. So I'm going to argue that we could get a year and a half of consolidation, and maybe we trade up back to remake the high. If we do take out the highs, how we trade at that moment will tell us a lot from a structural standpoint and from a technical standpoint, whether we're going to do yet another leg up. The issue here, let me look, 73,794. The low was 74,000. So we came just to that high. I'm sure a million people have drawn that line. That's your support line off that number. But the reality is, we have the same thing going on that we had with the patterns. I'm going to show you. I'm going to keep this lesson. This is going to be a lesson night. But this is, once again, so yeah, once again, I'm just going to draw boxes around here. So these are these boxes that I just drew in are basically, this was kind of an expansion, normalization, move up. This was another expansion. It started to get the upward channel, and then we blew out of there. Now I think what we have to do here is we have to get these, this market grid is in that volatility. So I think at some stage we have to, and this is a monthly. So June, oh no, we'll go May, June, July, and we're looking at August, September, and then maybe you can get the moonshot. But it's going to take another several months here. And the broad range, we could make a new high, but the market grid is putting a top around 103,650 right now. And if I'm right about this, and over the months we start to contract down, that will tell us exactly what we need to know from the standpoint of what this next pattern is. And you can even see, I'll draw one more box here. But even this big expansion here, it normalized, and then we got the channel down here. This one normalized, we got a channel up. This one normalized, channel up. So we have to, very early in this pattern, we'll start to see that channel actually flow. So, all right, where are we at here? 8 minutes. Let me look at some comments here real quick. Yeah, I see someone saying economic rally from low energy costs. Yeah, it's interesting because we have a regional chain out here, mostly Arizona, I think some California stuff, maybe Colorado, but called Maverick, and they're just juicing it. They won't put prices under $3. It's like 307. I saw $2.99 inject it right to 204. If we were to look at that, we probably should be printing 290s out there, but they're playing the game. So as long as the public will do that, so there's a little bit of a kind of a range from the standpoint of how much the people, especially on gas itself, they're not going to want to lower the price, although they're going to keep the margins up as long as they can until people start squealing, until the public knows maybe there's a hit in there to go from. So yeah, just looking at a couple of comments here. Yeah, that's interesting, Jeffrey. That was the other thing that happened, the grid outage in Portugal and Spain. That was interesting. Yeah, Michael's telling me 6,200, no leg down until 2020. Okay, we'll see. Time will tell. Appreciate your comments. Yeah, I don't know about, I guess maybe there's a BTC. Season. There's seasons now in Bitcoin. Okay. I've never been on seasonalities, but okay. It will adhere to the market grid, I think here. Oh yeah, Texas Dave. Yeah, Elliott wave has downtrends. You can have 5 waves down. Everything is inverse. Yeah, absolutely. Well, maybe I wish I saw that. I don't know if there's any around right now, but certainly yes. Just looking through a few more comments, folks. Yeah, JH, I agree with you on the PPMs. I'm just looking here. Yeah, so all of the Green Garden Capital, all of the numbers that apply to the upside are inverse on the downside. You just, for a negative, instead of plus 2.5, it's minus 2.5. All the numbers are exactly the same, only negative numbers. So I just illustrate the long, but that's a good question. Let's see here, a couple more. Yeah, and by the way, I'm going to come back up. I'm still on screen. I was zoomed in looking at your comments. Yeah, so I am hoping that sometime in the next, before Wednesday morning, I'm hoping that I will have those videos I did from the Wave Tech on Friday. It was a disaster, and they look like they're downloadable now. I just have to find the window of time. It's going to take probably an hour and a half to do that job. So, and only I can do it. Okay. About 3 minutes ago, but I think we're good. Yeah, so I'll be back same time tomorrow. I appreciate everybody coming. The channel's growing again. There's life at the Kendall Report, so we'll go from there. I did have a little mini setback, but I got it fixed. I'm working on changing the data sheets that we have out there, and I'm trying to update them to the point where I ultimately, there's like a data box to dump your stuff in, so you don't have to run it on Claude the same way that I'm doing it right now, because Anthropic and all the big AI boys and girls rolled out new models and updated everything. Everybody's in competition. It's almost like it's a race. They all do it on the same day. You know, like it's a race. 1, 2, 3, go, and everybody raises it. Well, one of the issues, and I've seen this happen around some of these AI models as they're updating these models, if you have built any kind of prompts and things around the older models, when the new models come out, the prompts don't work the same, which is highly frustrating. And I was working earlier today. I had 4 Claude windows and 4 browsers basically running different jobs, and one on ChatGPT that I was working on. But most of them are Claude stuff that I'm working on, a programming effort right now. And all I can tell you is it's frustrating to try to move ahead. And they kind of tell you, sometimes they'll leave the old model so you can go back and use that model. But I'm seeing some things with, especially trying to do prompting to give, you know, myself and you folks ultimately some kind of technology that you can use and bring in data. So I think I've been working on something, and I'm trying to build this big module dashboard that not only it can go fetch data as well as you can dump data in, so it can get comparative data and other data that it needs just by clicking a button. And I've got most of it working. It's not ready, but I kind of just last weekend I got blowing up that one of the things I worked really hard to the wee hours of Saturday morning broke, and I haven't unbroke it yet. I went back in versions, but I'm not able to unbreak it. So I'm trying to figure out what's going on so I can move that project a little forward. So, but it has to do with these models. So anyway, thank you again, everybody, for watching. I will be here tomorrow, same time. We're gonna keep rolling forward. And I appreciate everybody showing up every night. And make sure you subscribe and hit the like button. It's free. See you later.